Good afternoon, guys. It's Vinod here from GrowWealth, and today is Sunday, 20th April 2022. Welcome to our weekly stock market update and the watch list update. Without further ado, let me share my screen so we can look at individual charts and the indices performance and also the watch list. So let's start with the watch list performance. Hope you can see this. So this is how our watch list has performed last week. The trend that we had for many months now, that our watch list was outperforming the S&P 500, has started to change in the last week. So 3 out of the 11 stocks we had outperformed, 2 just about meeting the market performance, and the remaining 6 underperformed the watch list over the last 2-3 weeks that we had this watch list stocks for. And this is a material change from how it was the previous weeks and also the previous months. So this signifies there's a change in character, the pullback coming, and the growth stocks and the breakout of failing. So we have to take some hint from that and adapt our trading plans and the investing style and also the stock selection according to that. Let me go back to the sharing my screen for the individual stocks and indices. All right, so let's start as usual with the CPC. That's the put call ratio index, which is at 0.95, bang in middle of the 1.1 and 0.8 levels that I follow. So this doesn't signify any market exuberant or fear, exuberant bullish sentiment or a bearish sentiment. So it's pretty much in the neutral territory. But the market action in the last few days, though, has pulled back quite a bit, particularly the tech sector stocks, growth stocks without any much earnings, but the revenues only, and also the Nasdaq index are doing rather badly compared to the S&P 500 and Dow Jones, which has just pulled back to the natural kind of support level after being after having an up move following a bounce in the last few weeks. So let's look at it. So this doesn't give us much sentiment about which direction the market will go because it is in the neutral territory. Moving on to the S&P 500 weekly chart. Let's make it a little bit bigger for you. So this had a nice 3-week bounce and then gentle pullback to the key moving averages. Still above the 21-week, 8-week, and 50-week moving averages. So according to this graph, the weekly chart, nothing is out of ordinary. It's just a gentle, natural pause after this bounce. Looking at the daily, though, it pulled back below the T line, and it's sitting at the 200-day. That's this kind of purple line, light purple line. That's the 200 simple moving average. So it's sitting right at 200-day moving average, just above the 50 EMA. So a very critical point to see whether over the next few days, in a week or so, whether this level holds, or if it pulls back, whether it gives a newer low by retesting this previous low in March and end of February, or gives us a higher low, which could mean further uptrend is likely to happen. Going back to the weekly, moving on to the Nasdaq. So this is QQQ, which is the Nasdaq 100 kind of ETF. This closed below all the key moving averages on the weekly. And as you can see on the daily, it found the 200-day moving average as a resistance and pulled back and finished on high volume pullback below the 50 EMA on the daily chart. So this looks a bit more weaker than the S&P 500. Now the next move has to be monitored whether, as I said, whether it retests the previous low and breaks it or sets up a higher low, which could be a starting point for the turning around after the crash. So that's Nasdaq, and this is New York Composite Index, which is kind of similar to the S&P 500 above key moving averages on the weekly. I'll take this arrow mark off. So Dow Jones, similar to the previous one, New York Composite and the S&P, whereas the Russell 2000, the mid-cap index, is quite weak. It's the weakest of all, I would say, because you might remember from our previous conversations that this long-term support was broken here in January, and it tries to reclaim it, found resistance at the beginning of February a couple of times, again at March, tries to break out, but it couldn't because that acted as a resistance. And then the 50-week EMA also acted as resistance and then turning it out. So this shows that there is a strong resistance at this level and further downside is likely. So this is one of the weakest looking indices of the 4 indices that we have just seen. Last week is also on the higher volume than the previous week. So if you put all 2 and 2 together, significant resistance and failing to break out of that resistance and high volume selling off last week indicates further downside is more likely on the Russell 2000 index and the stocks that is covered within that index. Bitcoin. So on the Bitcoin, we had the weekly MACD turning positive week before last, and the daily was positive at that time, but then it quickly moved below that MACD. It crossed down, and I follow a dual MACD strategy, as you know. So based on that, I used a stop loss here and exited that. 45,000 mark is a resistant level. That's this white line, and it broken out of that, but found the 200-day moving average as resistance and pullback. On the weekly, we still have a positive MACD cross. So as long as the weekly positive MACD is there, the trading zone is open. And depending on how the daily MACD works out, it might give us another entry point if there isn't any further loss of momentum and the weekly turning negative as well. So that is something to watch. Moving on, let's move on to the watchlist stocks that we had. So let me double check on the watchlist. Yes, that's the one. Okay, so GFS. I think this was covered in the previous week as well. It's a failed breakout on that week, so essentially got out of that, but we maintained the same watchlist to see how it performs. So this is quite bearish sentiment, bearish trend, below key moving averages and broken down pattern. It needs more time to settle and find another base. ANET. So we were following this on the daily chart here. It was breaking out of this consolidation pattern, but soon after, within a couple of days, it broke down. Still above the 50-day moving average, but that's the engulfing, bearish engulfing pattern. On the weekly, it's still above the key moving averages, but on high volume, bearish engulfing candle, that's a negative side. There are better charts than this, so it's not the greatest positive looking chart. New core is just consolidating after this real positive 15% gain week on lower than average volume. Weekly MACD is still positive. On the daily, it pulled back gently. It's a smooth pullback to the 21 EMA, and then resuming its uptrend, close about the T line and maintaining about the T line. So if you draw a line here, connecting this node, so that is a mini resistance there. If it convincingly breaks out of that, that could be that could lead to further momentum burst for another few days of price gain, but that has to be seen. It hasn't broken down. It's still within the healthier price action, well above the key moving averages. So still positive chart. AOSL, along with the other semiconductor chip manufacturing stocks that pulled back last couple of weeks, this also got pulled back right to just about the 50-week EMA. And if you look at the daily, it's well below all the short-term key moving averages on its way to reach as the 200-day moving average. These pullbacks here in the last couple of weeks were on high volume, or certainly higher than average volume, and the down days have high volume more than the up days. So not a great sector, not a great stock. Shows quite a lot of selling coming in and weakness in this stock. So if you're on the stock, it doesn't look good. It's not bullish setup at all. MP broke out of this intermediate term resistance. It is staying above that resistance level still. It came and retested that previous resistance. Hopefully it accesses support. Last week had lower than previous week's volume. So there's more of accumulation than distribution, which is positive. On the daily, 4 days of gentle pullback right to the 21-day moving average and the previous resistance level. So I would like to see this zone access a support and the price kind of resume its uptrend from here on without breaking down further. If it breaks below this zone on higher volume, then all bets are off. It will be classed as a failed breakout. So that is something to watch. Remember, there's the earnings coming up in a month's time. AVGO. Yeah, so again, this is Broadcom, semiconductor, chip manufacturing, those kind of industry, which was quite weak last week. So that is a dodgy, bearish candle. So that's not looking good. This is quite bearish, although it hasn't totally broken down. It's still sitting at the 21-week moving average as support. The sentiment and the price action is quite bearish, and it broke back below this kind of resistance level. So this would probably be considered as a failed breakout as well. Moving on, MRVI. So this is a relatively new IPO, came to the market in November 2020. It pushed back about that kind of IPO level, came and almost retested it. It finished about the key moving averages with the engulfing bullish candle last week. The volume is low though, so that is not too encouraging. So this is the all-time high. This is a lower high, lower low, another lower low. This high is not above that, so this is still a lower high. So we are still in the downtrend, but it seems there's a bit of accumulation coming in at this point. So it's not totally bearish, extremely bearish stock, but it's still on the downtrend. So what we would like to see is it sets up a higher low and breaking above this to set a new higher high to indicate that the resumption of the uptrend is back. So MRVI is in the medical field, and there are some positive sentiment coming towards the medical field. So this stock is something to continue to watch. JNPR, good up move for a long time, still above key moving averages. Some selling coming in, but on low volume. The more it came towards the 50-day moving average, the volume is dying off. So I would like to see the 50-day moving average access support, which would roughly be the 8-week EMA or 10-week EMA around that level, and then find further uptrend. If you look back towards the chart to your left, the high volume, the up moves, up weeks had high volume, much more than down weeks, except here, but there's a lot of accumulation happening. So it's still something to watch. MACD is losing some momentum. So that is the warning sign. The rest are still bullish. If you draw a horizontal line here, so that breakout hasn't worked. So you'd want to see whether it immediately recovers that breakout level, in which case it will be bullish. If it breaks down further, of course, all bets are off, and this will be classed as a failed breakout. The next one is ACLS, same story here. Nice strong week, showing us a breakout, but then soon it died off. So this is a failed breakout, bearish setup. Palo Alto Network, nothing wrong here. Still one of the strong growth stocks. This and the CrowdStrike, both of them are holding reasonably well. Not a bond or kind of screaming buy for growth for CrowdStrike, but this is still almost close to its all-time high. The consolidation weeks are on low volume, and then up weeks coming on higher volume. So it shows accumulation is happening. So of the growth stock, the cybersecurity stocks, Palo Alto Network is one of the stronger looking chart at the moment. CTSH. This is an interesting chart because this kind of collapsed below the 50-day moving average, but then it found a support here, 3 days of consecutive up move, but below average volume. Then I looked at, zoomed out and saw there's a trend line here, which it seems to be respecting 1, 2, 3, 4, 5 times that trend line has supported. And that also corresponds with the 100-day EMA. So for this stock, 100-day EMA seems to be act as a support. Higher volume down weeks, the last couple of weeks, is not a good sign. It's a sign to be cautious. So it's not very optimistic looking chart. Although it kind of recovered some of its losses, it's still close to below the 21-day EMA, and the volumes were below average. So that is to be monitored. If this doesn't get immediate momentum and builds further upside, it's likely to fail, breaking down below this trend line as well. If the trend line breaks, that's a clear sign of trend reversal for the stock. So those were the watch list stocks, and this is the bonus stock that I spoke about the other day, bonus focus list. So this is GFI to capture the trend of the gold mining stocks. There is the resistance here around 1450, which it convincingly broke out, and then gentle pullback towards the natural support level, which is the T line on the weekly 8 EMA on reducing volume. On the daily, though, it looked a little bit more dramatic because it was a little bit of a chop. But then if you zoom out and look at it, there's the pole and a flag. So there's a bull flag pattern slide, and it came and retested the previous. Let me go to the weekly. Sorry. So there's a previous high here. It came and retested that previous high level. Let me make it a bit more visible for you. And let me take this off. Okay, it came and retested that level from July 2020, and also the long-term support level, resistance level from all the way back from 2002. So this level here, around 15 or 1480, is a strong resistance for many years, and certainly for many our year and a half here, right? So it broke out of that and then came and retested, still holding that. So it is acting as a support here and finished well above the T line here on the weekly. And the daily, again, as you can see, it finished above the T line and the 21-day moving average, well above the 50. Moving average is aligned in the right direction. Price is still working its way into the bull flag pattern. If it breaks above this declining white trend line, currently sitting at about $15.90 level, then it could resume further uptrend. But I'm watching for that breakout. Okay. Moving on to our new watch list. Let me now quickly share the names on the new watch list and then come to the chart pattern. So this is the new watch list. I've had a couple of other names as well, but because they were in the same sector as some of the other stocks, I had to kind of pick one over the other and then ended up with these names. VUKE, and that is an ETF following FTSE 100 index of UK. So VUKE is an ETF to follow the UK index FTSE 100. The next one is AMR. DE, that's Deere & Co. STLD is Steel Dynamics. NTR, that's the fertilizer company. So they are finding some good support and lots of bullish action. Shell, oil and gas exploration company. And I haven't included some of the other oil and gas sector names like BP and Devon Energy, Marathon Oil. They all have some good stocks and pretty much identical looking stocks as well. Of course, we can't have everything in the watch list, so I've chosen Shell over the others, but all of the other names that I mentioned now are also looking good in this chart setup. CAH, that's the medical sector. CVX, that's Chevron, that's oil and gas again, a US company. WPM, that is to play on the gold sector. Okay, so this gets revenue and income from the royalties, I think. So if the gold price increases, gold mining is doing well, then WPM will do well. SWAV, that's another medical, Shockwave, the company's name, and that's another medical sector stocks, and that's doing really well as well. GFI, we just saw the stock chart a minute ago. GFI, which was the focus list stock from the previous week, so I'm keeping that in our watch list for this week. LPLA, that is an interesting looking chart. That's on the financial sector, where most of the other financial sector stocks are breaking down, and it's in a very clear bearish trend, bearish territory. LPLA seems to be doing the exact opposite of it. It's on the brokerage side of businesses. So NNOX, that's another medical line. NNOX is the newer company compared to the other stocks, which are either at or close to the higher price, all-time high price. NNOX has been pulled back and crashed quite a lot. And this is more of a recovery play. And I'll tell you more by looking at the charts in a second. Quickly, let's move on to the charts. So the UKE, FTSE 100 tracking ETF. So there is a fear of recession happening, and people are moving towards defensive names. And FTSE 100 has quite a lot of dividend-paying defensive names, heavily leaned towards oil and gas and medical sector companies. AstraZeneca, one of the top leading stocks in the FTSE 100, which is also doing very well, and I think it is at their all-time high. So the recent strength here indicates, and the volume also indicates that there's a lot of buying coming into those defensive names. So I thought, instead of individually looking at individual UK stocks, it's good to kind of focus on the ETF that tracks that. So this is the weekly chart, strong and bullish sentiment. AMR. AMR is Alpha Metallurgy Resources, and it had an incredible run here, and then a pullback, consolidation, breakout again here, and then a strong run from 72 to 125, 130, and then the last 5 weeks it's consolidating. There's some strong volumes coming up. The price is holding off for still well above the key moving averages, and same on the daily as well. So if you can draw a horizontal line here as a resistance, if it breaks out above that, will be a strong breakout, assuming that it breaks out on high volume. So here you can see it's consolidating, but the volume is declining. There are some high volume distribution days here and there, which is not encouraging. But all in all, if you zoom out, it's setting up a triangle pattern, a consolidation. And if it breaks out on volume, that will be a strong bullish indication. So I'm encouraged with the price action of AMR. DE, Deere & Co. This provides tractor and various farming equipment as well. So this was the initial post-corona crash bounce. And then it had a second leg here after the COVID vaccine being introduced in November, right there. And then it did nothing for a year, just went sideways. It broke out of that zone, and then it pulled back and retested that resistance, now turned support, which is also the weekly 8 EMA. The volume is coming down. MACD is positive, and on the daily, pull back to that level, retested, and then bounced off to finish the Friday above the T line. That is, I mean, it doesn't automatically mean it goes to the moon from here. It can still consolidate, allow the 50-day moving average to come up, or try and retest the 50-day moving average and stuff. But so far, this is acting really constructively. And the previous winner resting is likely to resume the uptrend if the market allows it to go further. The next one is Steel Dynamics. Steel sector is doing good as well. Similar story to the strong up move, consolidation. There's a shakeout. Quite a lot of people have shaken out, including myself, on the stock when it broke below the 50-week moving average. But then it kind of found its buyers there with 5-6 consecutive weeks of up high volume buying. And then now it broke out of that kind of previous resistance at this point. and then gently kind of pulling back, taking a pause to the to the T line on the weekly. So continuing to act really well and bullish in its setup. NTR. So this is what I mentioned about. This is Nutrien Fertilizers. So this is a fertilizer company. Let me zoom out to the monthly. So you can see how strong it has been on the monthly chart ever since it kind of bounced off the coronavirus crash in August time in 2020. Since then, it hasn't looked back. It kind of picked up its pace the last few months, February and March, and then consolidating. Still above the key moving averages here. Nice and strong setup. And on the daily, as you can see, if you draw a line, descending trend line, it just broke out of the descending trend line. It's a doji symbol candle on Friday, which means indecision, and the volume is slightly above the previous day's volume. So you'd want to see that this descending trend line and the T line 21-day moving average holds as support, which is necessary for it to resume its uptrend. Fertilizer stocks are doing quite good lately, and the earnings and sales figure is also good. So this is one of the active stock I'm watching in my personal watch list. Shell. Okay, let's zoom out to the weekly. So I have posted this picture quite some time ago when the stock price was around here, I believe, when it broke out of this zone. And I've indicated the 200-week moving average, and then this kind of green bar, which is the support from the last support for the last 4 years. This support had been broken down here, and now it's likely to act as a resistance. So I expected that it could go up and touch that as a price target, which it did last week, and it's now within that zone at this point. We all know what's happening in the oil sector. The price is going up, and the oil and gas companies are finding beneficial, finding it as a good period for trading, right? And the prices are responding accordingly. So it now touched it, high volumes as well. This could act as a resistance or something to keep an eye, whether this kind of breaks down from this resistance, or it breaks out of that and goes towards that previous all-time high or not. Very quickly, let me show you the other stocks. So this is BP. So this looks like how Shell used to look before it broke out of that 200-day moving average, 200-week moving average, sorry. So this is acting well. I like Shell much more than BP for some reason, based on historic price action. And also Shell is about the 200-week moving average. So I have invested in Shell, but this is kind of building momentum for further upside as well. This is Chevron. Similar story on the weekly, so broken out of the 200-week moving average. Price is about the key moving averages. Key moving averages aligned in the right direction. Strong up move, and for the 5 weeks, the last 5 weeks on reducing volume, it's consolidating to the sideways. So let me draw a box here. So if you draw a box, so that's the consolidation zone. When it breaks out of the consolidation on high volume, that would be a good breakout point, and you can use the low of that box or low of that week's candle as a stop, if that suits your trading strategy. This is quite a strong looking bullish chart. CAH. Let me zoom out to the monthly. So if you look at the monthly chart, since 2020, it had a fantastic run from 25 to 91.5, and then that is in 2015, and then it went for a very long base. It's still kind of creating a long base here, and the last few years it found a base here at around 200 month and the other short-term moving averages on the monthly, and just coming out of this. There's a support here which acted as a resistance in these couple of regions, and it's now trying to break out of that level. Moving on to the weekly, there's the buying volume coming in. There are buying volume coming in. Accumulation is happening. The price is below this kind of resistance level, the yellow line. On the daily, it consolidated and then pushing up on high volume. So that's a clear change in sentiment over the last few days. Although the price is just below that kind of resistance level, on the daily, this is a very bullish setup. It'll be telling you that this acts as a resistance or not. If there's a short kind of pullback, that might be a buying opportunity, and then resuming upwards. Of course, you don't want to be chasing any extended stock in this current market, because that wouldn't be a good risk-reward ratio. So applying a suitable risk-reward strategy, risk management strategy using the tight stop loss would be advisable. So if you're looking for 7 or 8% stop, so low of the day, low of the week of last week candle might be a reasonable point. And as you can see on the weekly chart, there's a lot of high volume accumulation weeks here. 1, 2, 3, 4, 5. So the last 4 months, there's a lot of high volume weeks coming up. So people are buying into this stock. So CAH is a strong looking chart. WPM. So this is betting on the gold price increasing and the gold sector, gold mining stocks also increasing. So it's kind of setting up here with a consolidation pattern, high volume coming in. If it breaks out convincingly about $50 mark, it can retest the previous high at 57 level. SWAV, this is a short, I don't remember the full name, but medical stock. So Shockwave Medical, there it is. Shockwave Medical, strong uptrend, pullback below the 50 big moving average, resumed its uptrend and recovered those moving averages, consolidated for 4 weeks, and now up it goes towards its all-time high on higher accumulating volume coming in. So then the price above key moving averages and the key moving averages are aligned in the right direction. So quite strong setup. So there is immediate resistance with the previous resistance level coming in around $250 mark. But right now it looks quite good. Halo. So Halo is, I don't think Halo is on our watch list, but I want to kind of show that there are certain names in certain sectors are working. So SWAV, Nanox are all in the medical sector. I want to show there are other names out there as well if you're interested to look for it. So Halo, you might remember from our previous watch list back from 2020, we used to have this stock in our watch list when it was having this uptrend here. It went for a year-long kind of wedge pattern flag or consolidation, however you may want to call it. And then the last 4 weeks, it now recovered all those key moving averages. T-line on the weekly has reclaimed, crossed above the 50-week moving average, whereas 21-week hasn't done that yet, but they're all kind of closely confluenced here. So if the price settles here, use that as a support, and then breaks above that level, because it hasn't given us a convincing higher high yet, that would be, once it does that on high volume, that will be a good bullish sign. Historically, it has done this and then pulled back, and sometimes it has failed as well. So this time I would like it to see it hacks constructively around this level, and then breaking out on high volume with a favorable market condition. That will convince me that a new uptrend is coming. Inspiro, INSP. So INSP is another medical line, Inspire Medical System. So consolidation since February 2021, as you can see here on the monthly. So nearly a year-long consolidation. You can easily draw a box here. Where is it? Roughly, yeah. So it's kind of gone sideways after having a strong up move. And now it's about the key moving averages. The down week last week is on lower volume, but the up weeks have been on higher volume. So accumulation is happening, and medical line is in the favor, because that's the defensive sector, right? So people are expecting recessions, and the defense names are doing well. So Inspire Medical is doing good as well. LPLA. So LPLA is LPL Financial Holdings. Does some work on the brokerage side, I believe. So this is doing really well. Increasing interest rates are favorable for this sector. I don't know why the banks are crashing. Maybe they are expecting a negative outcome from the suspected potential recession. But the brokerage firm, this one particularly, is at all-time high. As you can see, let me zoom out. So it's at all-time high from left side, bottom of the left side of your screen to the top right, bottom left to top right. That's the fantastic chart that you can expect. A nice pullback to the 50-week moving average, and then high volume bullish kind of recovery to the all-time high price. So the all-time high is 196.29, and it closed at 194.98 with a higher price on last week was 196.20, so almost at all-time high, but this is the all-time high close. So this is incredibly bullish setup. Whether it will continue uptrend or whether it will be a failed breakout, I don't know. The volume is strong, which is positive. So that's why you need stop losses, because you're not always right. The market doesn't care what you think. You interpret the chart pattern, you have an expectation. If you want to trade, you also have a stop loss to protect your capital, if in case our analysis is wrong. So I'll be looking to buy the stock somewhere around the current price with a tight stop loss around this level below the 21 or below the T line, in order to kind of not lose my capital if the stock pulls back. But this looks quite bullish in my eyes. Nanox. So IPO'd in August 2020, quickly went up by a lot, and then crashed all the way from 93 to 8. So it lost more than 90% on this crash. But the last couple of weeks, as you can see at the bottom of your screen, high volume up weeks have been happening. And if you go to the daily, it had its earnings, revenue was high, and bet the analyst expectation. So it had real strong post-earnings reaction here, a day of pause, and then further up move, and then high volume gap up. It's holding all of that gaps. It just filled that gaps, but holding above the key moving averages and holding above where it bounced off of around $9.5 mark. So unlike, we want to see whether it kind of crashes after breaking out of 50 like it did back in November 2021, or whether it holds. The volume clue here and the post-earnings reaction compared to here pre-earnings reaction gives me a hint that this might be a beginning of a recovery process for the stock. So I would expect, I may be wrong, but it feels like it might find some support around this level here and could go and test the declining 200-day moving average, which is currently at around $18.95 mark. So I thought I will add this as a recovery play stock. Right, so that concludes the watch list for next week and for the next few weeks. I'll show you the list again for the watch list: UK, AMR, DE, Steel Dynamics, NTR, Shell, CAH, CVX, Chevron, WPM, Shockwave Medical, GFI, LPLA, and NOx. They are the watch list for the next few weeks. Hope it made some sense, guys, and hope it was useful. The market is quite mixed. People are expecting recession. Defensive names are acting well, medical, oil and gas sector, and some gold names as well. Anything that's working can turn around and fail immediately as well. In this kind of volatile market, there's still some rotation happening. What happens in Ukraine, what happens to the interest rate, and all of that can dictate the direction of the market. So play safe, and be nimble. Hope it helps. If anything, drop me a line if you need any help. Happy investing. Happy investing too. Happy learning as well, and successful investing. I see you in our next week's video. Bye-bye.